Email query next. Rajiv Chabra says that he's 54 years old, works as a vice president in a top corporate company. He owns a house in Bengaluru. Now he wants to know if he should go for a reverse mortgage loan or a loan against property. He needs around 60 lakh rupees for his child's education abroad. Kartik, this is a question that's coming to us pretty often nowadays.
That's right.
And a lot of people are mistaking a reverse mortgage loan for a loan where they actually get money up front.
Yeah. Exactly. So, a lot of people think that, their property is available, so they want to unlock their property, the value of their property and start using a loan again. But see, fundamentally, you spend so many good years of your life buying that property. Now, as soon as you completed the buying of the property, immediately, if you want to do a reverse mortgage and start, again, sort of rebuying that property all over again, then, there's going to be a lot of pressure on you and your EMI is generally never going to end, which is why fundamentally, it's always wise to start education planning way back when your child was actually maybe 1 year old or maybe when he or she was born. But having said that, you see, reverse mortgage fundamentally is available for retired people. It's a retirement planning product. It is not an unlocking of property value product. So you're 54. Most institutions do not give you a loan till the time you cross 60 or so to say you're retired and you want to have some sort of a pension support, and which is why these products kick in. Now, in the interim, what would you do? So, a couple of options that are there before you are. You could think about a loan against property. Fundamentally, most banks are happy to lend you up to the extent of about 20 lakhs. And which is for international education. Rules keep changing, so it's obviously best to check with the bank that you have a working relation or an ongoing relationship with. They will ask you to put your property probably as a collateral. Obviously, they'll ask you to stand as a guarantor for your son. So all of that you can do, and you can take an education loan if that sort of helps you with putting in some resources of your own. If that still doesn't help you, then loan against property is your next bet. If you have a portfolio of maybe mutual funds and shares which are blue chips and that you don't want to sell, maybe you could consider a loan against securities. But again, there's a limitation of up to 20 lakhs there. So maybe you want to do it between yourself, your spouse, maybe your son if the son himself is a major. So there are a lot of options there, but give or take, it seems to me that loan against property might be your best bet at the moment.
So Rajiv, loan against property, education loan plus a loan against property is probably the magic formula that you're looking for. Before we move on, Kartik,
yes.
What essentially is a reverse mortgage loan? Because like I said, we get a lot of these questions.
Correct.
So what exactly is it, if you could just break it down for our viewers?
So in a very, very simplistic format, reverse mortgage is the reverse of obviously a regular mortgage. So in a regular mortgage, let's understand that. What are you doing? You are buying your house brick by brick and you're building it in some sense. So you buy a property and then you've taken a loan. Every month you're paying a little bit amount of money as principal and interest, and therefore brick by brick, let's say you're buying your house. In a reverse mortgage, let's say brick by brick, you're selling your house. So what you're doing, in other words, is you're actually telling the bank, here's my property, I'm mortgaging my property once again to you, I am in need of some money, so you're giving me some amount of monthly fixed amount of money. Now that money becomes a loan. You don't of course have to pay any interest on that. However, at some point of time, your beneficiaries, if you're going to give that property as an inheritance to your children, maybe they would consider one of the two things. Either they convert all the money that you've taken, withdrawn till that point of time, they convert that into a lump sum loan and then start paying an EMI back. Or maybe they consider selling off that property. The bank realizes its principal or the loan that it has given you through these monthly little bullets of money. And they also recover all the interest that is accrued on that money. And then the balance, whatever is left, is then given to the nominees and the heirs and is distributed between them. So reverse mortgage, in effect, is in a way selling your house bit by bit, and which is why, it's a psychological thing, it's an emotional thing. People don't want to do it till the time there is no other option available. So, but it's a fabulous
Which is also
product.
probably why it's not really taken off in India. It's
Absolutely
been around
true.
for the last 10 years at least.
Yes, absolutely.
And it's not really taken off, but what you need to remember is a reverse mortgage loan will not give you a lump sum payment. What you essentially get is more or less, you can actually compare it to a pension that you get after retirement. You're going to get a monthly income from that particular property. So it's like the bank is paying the EMI back to you. So that's essentially what a reverse mortgage product is.
You can watch live TV on our website mpnow.in. Find us on Facebook at facebook.com/magicbricksnow. And don't forget to click the like button. You can also follow us on Twitter at magicbricksnow. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/magicbricksnow.